Let's analyze together Inditex stock, Industria Diseño Textil, the owner, Amancio Ortega, and right now, his daughter, leading the company, and it's completely nuts. Let's analyze it together. First of all, guys, remember to read the disclaimer right here in the video description below. Here's the latest uptrend that started back in 2022 at the end of the year, and it's completely nuts. Here's the trend line, the support line, and it's completely respected. Every correction it happens, it goes back and it rebounds completely strong, in that sense. And actually, this is because there is a reason behind it. And let's analyze first of all the fundamentals, because the fundamentals they're gonna explain exactly why this happened. And this is the explanation, guys. It's like the best earnings ever of the company. Actually, with the latest quarter, it was like more than 1.6 billion in just the last quarter. So completely insane. And actually, then you have the dividend as well, because the dividend is quite good. Actually, we're talking about like a dividend. Let's see the percentage. 2.37 if you buy it right now, but obviously those who bought it at the beginning, like at the beginning of this trend, they are getting more than 5, even 7%, 8% of dividend yield. So completely nuts in that sense as well. And that's the thing, it's like it has been improving every quarter in terms of net income. Even though the surprises factor, most of them, they were negative. But look at these three that we have right here, very important ones, because these 3-4 positive surprises factor are behind this uptrend. When you have like a positive surprise factor, investors tend to buy the stock completely insane. And actually, it happens in every market. When they release the earnings and they are better than the estimates, you can see this typical plus 8%, 9% after the following day, when the market opens, after this earnings released. And this is the thing, you follow the trend, and it's completely respected. So obviously, this is the present. This is right now how it's performing. It's really good. But the key question here is like, how is it gonna be performing in the coming years? So right now we're at the beginning of the year, 2025, 2026, 2027. We're gonna see how it's gonna perform in the upcoming years. So for that tool, we need to see the forecast. Important factor, the first thing that kind of worrisome, I would say, because the stock is near new highs. But that's the thing. Look at the next quarter, the next financial results that are gonna be released. The thing here that I like here is like the estimate is below the last one. Even the previous one. So the last two quarters were better than the estimate of this quarter. Obviously, you had to go and compare with the similar results. So obviously, you go to the previous year. We're talking about the better net income, So the fourth quarter 2023, we had an estimate and reported 0.41, and this one is 0.44, a little bit better. So in that sense, it's good. So obviously, it's like if you consider, when they release the earnings, it's gonna be like a worse net income than the previous one. Maybe there is a correction, kind of it doesn't have to be huge, but it can correct, it can happen. But obviously, if you consider these 4 quarters, 2023 and 2024, and then the next ones that we have here, 2024, 2025, it's like the projection is very similar. Actually, if we take into consideration the last one, look at that, 0.59. So obviously, that's another best earnings ever in the company. So in that sense, the future of the company is good. And actually, we go to the annual, it's completely insane, guys. I mean, look at the 1.89 in 2024, 2.09 in 2025. By 2027, 2.47. Obviously, it's not crazy, but the thing here is like the growth, the constant growth, the steady growth that you see over time every year. That's the type of stock you want to invest in, It's like on Nvidia, it happened the same, It's like completely crazy because Nvidia is like a business, AI business. It generates a huge cash flow, nothing in comparison to this one. But it's still, it's like when the trend is a trend, and the EPS forecast and revenue increasing every quarter, and then you have the forecast and the estimates. That's the thing. It's like if it's positive, and if it's better every time, it's very difficult to see, to buy a stock like this and not performing better than the rest. The other stocks, they are like similar EPS forecast every time. There is no constant growth, and when that happens, the stock doesn't skyrocket. It stays sideways. It can happen. So that's the risk. And not to mention, the stocks that are in losses. You want to buy a stock that is a negative net income, that's very risky. And normally 9 out of 10, you're gonna lose money with those stocks, because this is the reality. There are some times where the markets has come, they are completely crazy, especially when the interest rates are very, very low. But it's not the case right now. The interest rates are quite high in comparison to previous times, and you want to invest in blue chip stocks. You want to invest in the ones that are performing better, and the EPS forecast like this is the type of thing you want to look for out. Okay, going back to the trend line that we're watching right here, technical analysis. Obviously, you see a breakout right here. It could be dangerous, but the RSI and MACD, there are another, these are my favorite indicators, because many people are using them. As they are using them, it's like the corrections, they pay attention to those indicators more than others. So they are people that analyze so many indicators, but many of them, they use these ones. So and that's the thing. When we go to the weekly chart and look at that, another thing that I don't like with this stock, obviously right now it's performing better and it could still happen, but look at this. Right now the RSI is not, it's kind of, you see the price action is making new highs, but the RSI is kind of signaling that bearish divergence. It didn't happen yet, obviously, and the MACD, you don't have the same signal, and that's positive in that sense. But we had to wait and see, because obviously, remember, guys, what happened during this period. Actually, we're gonna draw right here a rotated rectangle, and this is like a very, very sideway trend. It wasn't making new highs, and actually it was trading lower over the long time. You buy the stock by 2015, and you will have made a profit, until 2023. So that's a long time, guys. So this is the risk that we have in this industry. Right now it's booming, but that can change, and you have to pay attention to those indicators. I would say, right now, to realize some profits is not a bad plan. After performing, look at the latest trend is like nearly 200%. Obviously, realizing profits at this point is not a bad strategy. Look at the extreme MACD levels. Obviously, this is my opinion, of course, but look at the extreme levels. You want to sell a stock at the top of the MACD, at the top of the RSI. Then you can buy back later. But you have to realize some profits sometime, someday, because obviously you want to avoid this type of situation. And you never know what's gonna happen. But if you realize some profits, you're gonna make sure that you perform better than other stocks, because obviously these times are very hard to hold the stock. I can show you many examples, many periods between 2000 2008. It's very difficult to hold a stock for a long period of time, especially when it's in negative territory. You buy right now and it goes back like minus 50%. It's very tough. You want to avoid that. So one strategy is to realize the profits in time, and then you can buy back later. And the MACD and the RSI are the best indicators for that. So thank you very much, guys. I hope you enjoyed the video. Remember to subscribe to Trading ST to watch more content like this, and see you in the next video.